Hey man, what's up?
Living it up. What about you?
About the same, man. This is your episode because we're talking about loans, mortgage options. Most buyers, we're talking about conventional FHA and VA. Most buyers, typical buyers, unless you're a veteran or active duty, you're looking at either a conventional or FHA, or if you're in rural areas, you're looking at maybe a USDA, but we're just going to stick to those three.
Cool.
Conventional, FHA, and VA. And the reason why I wanted to talk about that, the main reason is a lot of people may not know what the differences are, what the pros and cons. You did a video this week about the cost of a 3% conventional versus FHA 3.5% down. And so, I didn't realize that there was a cost difference to the buyer there. I guess I take that back. I did know, the private mortgage insurance is expensive, and then you've got the 1 3/4 is what it is, right?
Yeah. So like on FHA, if you're going FHA, they charge 1.75% up front. That's financed into the loan amount. So really, a lot of buyers, and that's where like somebody like myself has to come in and educate these guys. Like, okay, here's an FHA mortgage. Okay, every month you're going to be paying 0.85% as a mortgage insurance premium monthly, but then FHA also has 1.75 that's financed into the loan amount that you don't see. It just increases your loan amount. So really, it takes away equity. It takes you longer to gain equity, right? Because you just finance another almost 2% into your loan amount that goes to FHA, Ginnie Mae, to pretty much, it covers them for foreclosures and other mishaps that happen on the FHA side, especially in that lower credit bucket where you might see some more foreclosures, bankruptcies, people who just don't pay their mortgage. Which I know that kind of sounds funny, like people don't pay their mortgage, but like I remember even last year, I had somebody I closed a mortgage for, and they never made a payment.
Wait, what now? How long had they had that loan?
The thing is, they never made a payment.
Okay, at all? Never made a payment in the life of the loan?
Nope. And then straight into foreclosure. So they closed on the house. So let's say they closed in June. Your first mortgage payment is going to be due August 1st, right? They just never made a payment. So then it goes into foreclosure proceedings, and that takes forever. So like, I think they just got out of the house. But they just wrecked their credit, and they're pretty much never going to buy another home. They're not going to buy another home for another 4 years or 7 years, depending on what route you go. So it's a really muddy situation. So that's what a lot of that 1.75% unfortunately goes to, is to protect the government on these FHA mortgages.
I mean, the good thing is we don't hear a lot of situations like that. I have never run into it. I mean, you would hear about them before I do, but I've never heard of a situation
and you
like
don't.
that.
And the thing is, and unfortunately I didn't hear why it happened. I don't know if it was, it could have been a multiple things, right? Loss of job, somebody got sick, whatever it was. Unfortunately, at that point, it's out of my hands. I didn't find out why. I did reach out to the buyer who bought the home because I actually really liked them and I cared for them, and I did reach out to them, but I never heard back from them. So I don't know what happened, and I really do wish I did, but it's kind of, that's a one-off deal. But I'm just saying that's what that 1.75 pretty much goes to protect, right?
Yeah. Okay. Well, that makes sense. I did not, in doing an FHA contingency, I always, check off that, add into finance into mortgage. And that's actually an option on the contingency. So have you ever had any where the buyer pays that 1.75 up front?
No, let's just call it as it is. A lot of those buyers don't have that extra money to go ahead and pay that premium up front.
Yeah.
Most of the time we're scraping together the 3.5% down.
You've got a veteran buyer and they're looking to buy in a competitive area, and they can use a VA loan versus a conventional loan. knowing that a VA loan unfortunately isn't as competitive in the market as a conventional loan, what do you recommend to that veteran who's looking to buy based on those two options?
Unfortunately, VA kind of has a bad rap because some of the listing agents and just agents in general, they don't understand VA lending, and they don't understand it's like, number one, it's a phenomenal loan program, and I kind of go a step above, and I'll call that listing agent. So let's say Tyler's putting in an offer for a veteran. I'm calling that listing agent and say, hey, they're going VA, you have nothing to worry about. All said and done, they get so tied up on the appraisal, right? Like, oh, they're going to require us to do all these repairs. Well, no, they're really not. Like, if the house is in good shape, it's going to be fine. Like, if there's things that aren't working, yeah, maybe you should fix them. There's going to be some things that VA is going to require because they want to make sure that they're putting their veteran, into a stable house.
Right. And that's
falling apart.
Right. And I'm glad you said the thing about calling, because I was going to ask, like, what can you do, or what can the buyer's agent do to make that seller and that listing agent feel more comfortable with going with that VA loan over conventional loan offer?
It's just educating the agents. I mean, and maybe I need to do a better job in Metro Atlanta on educating agents on VA on why it's actually a phenomenal program. And they think just because the veteran's not putting down any money, like they're not credit worthy. I closed on a $1.4 million VA deal. He didn't put a penny down.
But he had a great credit score.
Great credit score, cash. Well, why? Maybe he didn't want to sink his cash into the house. He wanted to use his benefit.
Mm-hmm.
It's a benefit. That's what people need to understand. It's like, it's a benefit. Like, these people deserve VA mortgages. They literally, they protected us for however many years, right, to earn this benefit to get a VA mortgage, and people need to respect that.
Yeah.
And that's where I get so mad, and I'm getting irritated right now just because people they think that VA's because they're going VA because they're not credit worthy. I'm like, this veteran that we just closed has probably a better credit score than you and 10 times the cash you do. So don't disrespect that veteran.
Well, I'm going to use a VA loan as, on the next one. We haven't used it yet. I'm going to use it on the next one. Tell me some of the benefits are, other than, it's zero or zero down, right? Which is one of the benefits. So, but, most people still want to put something down to affect their monthly payment, right? It's zero down. So what are the other?
Substantial. It has to be pretty substantial down payment to really make it worth it, right? Because you got to think a 30-year VA mortgage is spread out over 360 months, right? So let's say you want to put down $50,000. Okay, if you divide that by 360, that's only $138 a month.
Mm-hmm.
So would you rather pay $138 more a month in your monthly payment, or keep $50,000 in the bank?
Yeah.
So that's something that I ask everybody is especially and it's been more and more popular the past couple of years because you know what? I think I would rather have money in the bank than put money down just in case.
Right.
Just in case there is another pandemic. Just in case I lose my job. Whatever it is, because guess what? It's really hard to get money out of your home unless you're doing a cash out refi, HELOC, something like that. And it's really hard if you don't have a job. So that's why, I would keep the money in the bank, to be honest with you.
So tell me, a couple other bonuses to, if you're a veteran using a VA loan, what are a couple other pluses to using the VA loan over a conventional?
Better interest rate than conventional all day long. There's no monthly mortgage insurance like FHA or conventional or USDA. There is a funding fee. So veterans do have to pay a funding fee unless you're a certain percentage disabled, and then you're what they call exempt, and you do not have to pay a funding fee. I can't remember off the top of my head what that percentage of disability is from the VA to get that exemption. I want to say 70 or higher, but that could be I would have to look it up, but there's a certain percentage of disability from the VA that you don't have to pay a funding fee. That funding fee that I'm talking about is financed into the loan amount. So you're not paying it at closing either. It's financed into the loan amount.
Okay. Very cool. Well, that's good to know.
It's definitely the way to go. And it's the most lenient. It's the most lenient on credit. It's the most lenient on debt to income ratio. People don't understand about VA appraisals. VA appraisal, you get Tidewater, meaning if the VA appraiser knows that this thing's going to come in short, or they think it's going to come in short, they will call me, they will call Tyler and say, hey, can you provide me comps that you came up to get this price? That doesn't happen on that doesn't happen on conventional or FHA. They just turn in the report short, right? So on VA, you actually have a chance to prove your case that, hey, this thing should appraise for $400,000. And then if the agent is so die hard that we had a bad report from the VA, we can then issue a rebuttal to the VA for them to review it and provide those comps, and they'll do their own analysis. So on VA, you actually have two chances to change value, where on conventional and FHA, you really only have one if you do submit a rebuttal to the appraisal management company.
They rarely ever accept those, right?
Well, I think Bill and I had one last year that did come up a little bit. No, we actually ended up ordering a brand new appraisal. But anyways.
Well, as far as the Tidewater thing goes, I've experienced that twice. And, in my years of doing real estate, I've only handled, a handful of VA loans on the buyer and seller side. In at least two situations, they issued Tidewater, which in my opinion, or to me, seems like that VA appraiser almost doesn't want to do the work themselves. They just want to go, I can't find it, so you guys tell me what it's worth.
That could be the case. And it's almost like, it's almost like the case where even now, or even the past 2 years, even appraisers have gotten lazy with, appraisals come in and write at contract price.
That happens a lot.
Contract price, but so you're not saying it's not worth $5,000, $10,000 more? How much work did you really do on this thing? I don't really know, but it's just kind of funny that you get 3 comps, which is the minimum, and it comes in at contract price. I just think that, there's some people out there, luckily on the conventional and FHA side, that we have a really good panel of appraisers that we. Yeah,
nothing against appraisers. I love appraisers. I love all appraisers. Nothing against appraisers. I just was mentioning the Tidewater thing.
Yeah. But, Tidewater, of course, is just a totally different rodeo in general, but I think it's great. I mean, they're giving you an opportunity to, prove your case, which is good.
Yeah, I mean, like I said, I've had that happen twice, and then
did they come in contract price?
Huh? No, not on this one. It didn't happen on this one. It happened actually not. It was part of the daisy chain. It was the buyer that was purchasing my listing. They were selling their house, and then it was Tidewater issued on that one. So, all right, guys. Well, thanks, man. Thanks, Ben. Have a good rest of your week.
See you, dude.